Welcome class, my name is Max Steinbar and today I will be presenting to you my shiny stocks. My companies include Bilibili, TransAlta, Renaissance Re, Chifu Technology, and Power Solutions International. The way I chose my stocks was to diversify between capitalizations and sectors. Now I chose large caps in order to provide stability for my portfolio, mid caps to provide growth potential, and one small cap stock for a high risk, high reward opportunity. Now for the sectors, I chose to have two traditional sectors, including energy and reinsurance, along with two emerging sectors, including media and AI-driven financial services. So first we're going to start with Bilibili. And Bilibili was founded in 2009 by Zhu, and he was inspired by the anime, comics, games community, in which he tried to create a niche fan base. You could see in these pictures that they're very anime focused, and cosplay is what's going on in that top picture up there is a very big part of the Asian young subculture. Those are their mascots. They're respectively named 22 on the left and 33 on the right. They're based in Shanghai, China, and they were listed on the NASDAQ in 2018, which really showed their growth from just a niche fan base to a large global superpower in media. Now, the reasons why I bought Billy were because I saw an 100% increase on the 1 month chart. So this is in September. We could see that it's at $15 in early September, and it rose to over just under $30 in early October. Now, you can also see that there's no significant dips. I saw that there was sustained bullish investor sentiment towards the stock, along with high volume support to also show that. We could see these green bars down here. This is the trading volume. So you could see that the height of the bars are larger than they were previously. And this is also due to China's economic stimulus package, which I'm going to talk about in a moment. Now, we can also see that the stock has a large market cap of $11.16 billion, in which this will provide stability. And you don't see a lot of large caps grow this much in this short of a time frame. So I saw a large opportunity here. There was no opportunity. I lost a lot of money. So what happened is this is a percentage change chart in which you're able to see the change a little more clearly than the graph on the left. And I bought, as indicated by that red circle right there. You can see the mountain that's indicated by the red circle where it was coming up. That was due to the Chinese stimulus package, in which a lot of people were hyped up and a lot of investors very excited. But you can see I bought at the peak. It started going down because a lot of analysts realized that there wasn't a lot of value to the stimulus package. It was very underwhelming. And what ended up happening is you see this black triangle marked E. That's their earnings report. And they came out with a price earnings ratio of negative 12.5. Now what that means is that for every $1 that they earned, they lost $12.5. So they were not profitable at all. They were consistently losing money. And that led to the second dip in week 7. So overall, I had a return on investment of negative 33.67% on about $20,000, which led to a loss of $6,733.16. Now my next stock, TransAlta. Now they were founded in 1909 in Alberta, Canada, which marks over a century in innovation in energy. Now, right now they're based in Calgary, and they transitioned from hydroelectric power, which is making electricity just from water, to other types of renewable energy, including wind, solar, and gas. Now, they sell to corporations that you know, such as Amazon and Meta. This wind turbine farm is actually 100% utilized by Amazon alone. So TransAlta runs the farm, yet all the energy is sold to Amazon for different clean energy initiatives. Now, the reason I bought TAC was because I saw no significant long-term drops over the 6 months. Now, this is a 1-year chart, and we're able to see from April to October, there was no significant dips, and there was a lot of momentum. You guys are going to see throughout this presentation that I chose a lot of my stocks, trying to ride the momentum, riding the wave, and trying to secure profits based off that alone. Also, the stock was mainly focused on renewable energy, and at the time, Kamala Harris had a very fair chance of winning this election. And we all know that she had very positive sentiment towards renewable energy, And I personally thought that if she did win, the stock was going to explode, as they have plenty of farms in America. So there was also a very strong 52-week high. You're able to see that this is the highest point on the entire graph. And when 52-week highs occur, often they go through their resistance barrier. The resistance barrier would be right here from the 52-week high. And this brings a lot of technical investors along with just a lot of high performance proof. Now, how did it do? It did pretty well. You're able to see, especially in this percentage change graph right here, that it had a bit of a bearish run. It looks pretty even on that chart, but we're able to see that it decreased a couple percentage points. But what ended up happening is the main news event here is that they ended up acquiring Heartland Generation, which is another energy company in which they bought it at a cheap price of $542 million. Now, this led us from having a negative return to a positive return, and we ended up with a return on investment of 7.03%. And that ROI on an investment of $20,000 led to a profit of about $1,406.74. Now, my third stock, Renaissance Re, was founded in 1993 in Bermuda, and right now they're based in Pembroke, in which they specialize in reinsurance. But before then, they were just a random insurance company in which they provided insurance to just homeowners for any catastrophe events, including tsunamis, hurricanes, tornadoes, and they started to insure off that. But now they do reinsurance. What is reinsurance? Reinsurance is when they insure insurance companies. So I'm going to talk about that in a moment. The reason I bought it is because Hurricane Helene hit shortly beforehand. And I personally thought that because of this, there was going to be increased claims of insurance, which means there was going to be increased reinsurance claims. So I thought that they were going to be able to sell more, have greater earnings. And we also see that they have promising growth over 3 months. This is about a 3-month chart. And we see that they almost have a linear growth. With such a large market cap, this means that this stock is steady. I wanted to see this continue over the time frame of the project, but it wasn't perfect. It had a couple of dips and it was pretty much stagnant. It was a little volatile, but what ended up happening is they had a pretty good earnings report in which they had an earnings per share surprise of 32%. Now what that means is that analysts predicted their earnings to be at a certain point, but the real earnings were 32% above those. So what ended up happening is a couple weeks later, the stock ended up going up a fair amount, and we got a return on investment of 4.18%, my least volatile stock. And with that on an investment of $20,000, we had a profit of only $826.56. Now for Qifu Technology, they were founded in 2014 in Shanghai, China, and right now they're based in Beijing, in which they specialize in these financial services driven by AI, and they do credit solution, financial analytics. And right now their main target market is people who aren't getting enough credit from normal credit providers. So these people aren't getting loans because they don't have enough income, they don't have enough reports. These small businesses, medium businesses, and just overall consumers themselves, they aren't getting any loans. So they try to focus on an untapped market. So my reason for buying is because, once again, we saw this Chinese economic package and there was a lot of hype around it. And we know that it eventually did become a little undervalued. But initially we see when it was announced on September 24th, there was a very high increase. And I wanted to once again ride the wave, keep the momentum. And you also see that there's a lot of trading volume right here. And we see that there was also extremely large growth since August. So I wanted to once again capitalize off of the momentum, and there was sustained bullish growth. And we see that in TAC, that there was a dip here and then it came back up, and that was a 52-week high, but this is different. They started low and they had a new 52-week high, and it's just been growing ever since. So I saw that there weren't any real significant dips over time, so I wanted to continue that and see if it would continue over the next time frame. Now, how did it do? It was my second best performer, and what ended up happening was it had earnings over here, and they had an earnings surprise ratio, surprise percentage of about 23%, and that made the stock rise a lot. And what happened is I had a return on investment of 17.05% with a profit of $3,407.70. Now, Power Solutions International, this is my favorite stock. This is my best performer. And they were founded in 1985 in Wooddale, Illinois. And they're still based in Illinois, in which they specialize in engine and power systems that they try to keep sustainable and efficient. And they are an original equipment manufacturer in which they try to sell their parts to other companies to make other end products to pass off as their own. Oh, and also you see that middle picture? That's a 3D x-ray of one of their engines. And the bottom picture is one of their power grids. So they are a small capitalization company. They had a little under 500 million in capitalization before I bought this. And I personally thought that that leaves a lot of room for growth, especially because we see in July over here, it was at about $7. In August, it went up to 10. And in October, right before I bought it, it came up to 20. So I personally thought that there was going to be a lot more growth over time because there's still so much more room to grow in comparison to other large cap stocks. They were also part of a lot of clean energy. So once again, Kamala Harris was going to help out a lot of these clean energy companies. And I was kind of betting on her to win so that these stocks could grow even more. But this is by far my best performer. And we could see that it had some slight positive growth as I went through the project, but when earnings hit, it was 122% more than last year's quarter 3 earnings. And what ended up happening was that they had a 25% earnings surprise percentage, and that ended up having a return on investment of 48.19% and a profit of $9,630. So you saw those percent change graphs on the right. I just wanted to show you so you could see it relative to each other. That Billy was by far my worst performer, with Power Solutions International as my top performer. And you see the other 3 remained pretty much stagnant the whole time, but in the last 2 weeks, they improved. And that was really what added a couple $1,000s to my portfolio. And now we see right here that I wasn't doing very well the first 5 weeks, but what ended up happening is we saw the acquisition from TransAlta, in which they got that other energy company, and that provided a significant gain for them. For R&R, they had their earnings. For PSIX and Kierfin, they also had their earnings, and that sent the stock soaring between week 5 and week 7, and we ended up at about $108,285.49. So my profit loss was $8,537.84, and my return on investment was 8.56%. Now the S&P during this time frame had about 5.65%, so I did outperform the S&P, and I did better than the chimpanzee, so I'm very happy with myself. And what ended up happening was that I think that I learned that I shouldn't rely solely on technical analysis as I did with Billy, and I ended up losing a lot, like on the last slide. I ended up losing so much on that stock because I didn't look at the news, I didn't look far enough into the Chinese economic package. And overall, I think I should have focused on the market trends a little bit more, but I feel very happy with my performance. Thank you very much for listening.